Global defense spending just hit $2.63 trillion, the highest in human history. The U.S. just proposed a $1.5 trillion defense budget. NATO abandoned its 2% spending target and raised it to 5%. The world is rearming at a pace not seen since the Cold War, and the defense stocks leading this supercycle are printing all-time highs, while most of the market bleeds. 3 simultaneous conflicts just forced the entire Western world to rebuild its military from the ground up. Europe spent decades underfunding defense, relying on the U.S. to protect them. Then Russia invaded Ukraine, and the peace dividend ended overnight. European defense budgets surged 20% in a single year. Every NATO ally met the 2% GDP target for the first time in the alliance's 75-year history, and now the new target is 5% by 2035. In the Middle East, the Iran conflict has escalated into direct military strikes. In the Western Hemisphere, U.S. forces intervened in Venezuela. In the Indo-Pacific, Japan just approved its largest military expansion since 1952. This isn't one hotspot, it's everywhere, simultaneously. And the defense industrial base can't build weapons fast enough to meet demand. Missile stockpiles are depleted, backlogs are at record levels. This is a structural supercycle, not a temporary spike. 4 companies are capturing the lion's share of this spending. Lockheed Martin, the world's largest defense contractor, trading near 612, backlog of $194 billion. They delivered a record 191 F-35s in 2025. They're the lead contractor on Golden Dome, a $25 billion AI-integrated missile shield for the U.S. mainland. RTX, formerly Raytheon, backlog of $268 billion. Patriot missile systems are being ordered across Europe and Asia. Free cash flow hit $7.94 billion in 2025, up 75%. General Dynamics builds the Abrams tank, the Gulfstream jet, and the Columbia-class nuclear submarine. Steady, diversified, and boring in the best way possible. Northrop Grumman owns the B-21 Raider stealth bomber. Record backlog of $95.7 billion. Book-to-bill ratio above 1, meaning new orders exceed deliveries. Demand is accelerating. Combined backlog across these 4 companies, over $800 billion. That's contracted future revenue that takes years to deliver. But the old-school defense primes aren't the only winners. Palantir is building AI-powered battlefield intelligence for the Pentagon. Q4 U.S. government revenue grew 66%. They're the software layer that makes modern warfare data-driven. The stock trades at a premium, but the contract pipeline keeps expanding. And Doral, still private, is building autonomous drone systems and AI command and control. They're the startup the Pentagon treats like a prime contractor. And the ETF play, Global X Defense Tech, ticker SHLD, returned 206% since inception in 2023. It holds Lockheed, RTX, Northrop, Palantir, and European names like Rheinmetall and BAE Systems in one basket. Now the risks. Valuations are elevated. If a peace deal materializes in Ukraine, sentiment could shift. Fixed-price contracts are squeezing margins on legacy programs. And labor shortages in aerospace manufacturing are real. Even with record budgets, the industry can't find enough skilled workers. So what's the chaos capital take? Defense spending is the most obvious macro trade nobody is positioned for. Retail investors chase AI and crypto. Meanwhile, Lockheed, RTX, and Northrop are printing all-time highs with $800 billion in combined backlog. Europe is rearming for the first time in decades. The U.S. just proposed the largest defense budget in history, and the world isn't getting safer anytime soon. This isn't a war trade, it's a decade-long structural shift. Position accordingly. The peace dividend is over. The world spent 30 years pretending it didn't need weapons. Now everyone needs them at once. And the companies that build them just became the most important stocks on the board. The capital markets are chaos. Embrace it, and I'll see you in the next video.